center of money news, ultimate wealth reporter Mark Chandler, global head of currency strategy at Brown Brothers Harriman, to get you set up for the trading day. Sean, I want to start with you and what's happening with precious metals, because I know that that's basically your wheelhouse here. Gold is already down 24% this year. I think it was off by about 7% last week alone. What happens this week?
Yeah, I think gold goes down a bit further, and the reason being is because you had gold go in a sideways range for about a year and a half, formed a rectangular pattern on the chart. It broke that around 1520, 1550.
Mark Chandler, global head of currency strategy at Brown Brothers Harriman, to get you set up for the trading day. Sean, I want to start with you and what's happening with precious metals, because I know that that's basically your wheelhouse here. Gold is already down 24% this year. I think it was off by about 7% last week alone. What happens this week?
Yeah, I think gold goes down a bit further, and the reason being is because you had gold go in a sideways range for about a year and a half, formed a rectangular pattern on the chart. It broke that at around 1520, 1550, and so there's a minimum price target that takes gold down to about 1240, and so anywhere in that range really is the starting point where somebody would want to start investing in gold again, but not a moment sooner, because these things can actually shoot further past that. Then once the dust settles and things stabilize, I believe we'll see gold eventually head back to the 1600 level.
Apart from the price dropping, though, Sean, what's the investment case for gold at this stage? I mean, there's no inflation out there right now, and certainly we're not seeing enough physical buying to be able to support gold at these prices.
Yeah, in the near term, I think you've got a near-term, long-term catalyst. The near-term catalyst is, I believe you're going to see stocks continue to correct further. I think you'll see Dow go to 14,000, S&P 500 go to 1,500. And so I think a lot of money might get scared and go into to gold there. But also, you're starting to see the dollar deteriorate. The dollar had gone up for 2 years. It reached
Hang on, the dollar deteriorate? The dollar deteriorate?
Yeah,
Isn't it stronger at the moment?
The dollar's going down for the last 4 weeks in a row, except for the latter part of last week. But yeah, and it formed a new lower low in the month of June, and so it's broken the near-term uptrend line. It's reached the top of a long-term downtrend line. It's been in effect since 2005, and so I think we could actually see the dollar roll over from here. If the dollar goes lower, then we see a lot of support for both gold and silver.
The dollar rolling over. What do you reckon, Mark?
Yeah, I don't know where that's coming from. Here's my take of things. There's three different forces at work here in the markets. First, of course, is the tapering talk by the Federal Reserve. Secondly, is the Japanese continue to sell foreign assets. Already this year, they've sold about $125 billion of foreign assets. And the third factor, encouraging this global unwind, is the fact that there's a liquidity squeeze in China, which has also been subject to a big carry trade as well. So I see the dollar as being the big winner here. I think the dollar's on its way to new highs for the year against the euro, Swiss franc, as well as the British pound.
I'm just trying to still understand the timing of this. That's all I care about. All I care about is what's going to happen this summer, meaning is this only going to get worse? Is it going to get better, and when?
What going to get worse? The market drop?
The market drop.
The last 4 years, we've had 5 to 10% corrections every summer, although I have to say,
but this is different.
This time it feels a little weird.
It's got to be different.
Because you've got China with now these issues going on. You've got the QE coming off the table. It does feel a little different than it did in previous
I want to know if this is cyclical or it's a little secular.
I think this is the end of a 4-year trade. And the 4-year trade has been short the dollar, long emerging markets, short the dollar, long commodities, short the dollar, long gold. I think this is a multi-year trade that's being unwound here. I don't think it's the same thing as last summer. I think this is a new world because they're talking about the end of the QE in the U.S. Even if it's not yet, it's going to be coming perhaps in the next 6 to 9 months.
So as the U.S. dollar strengthens in that scenario, can stocks also rise, Bob?
Well, I think this is the unwinding of the carry trade.
Agreed. It's the unwinding of the carry trade, and stocks can rise because we have a manufacturing renaissance. We're heading toward energy independence. You've got the federal budget deficit falling, and so the debt-to-GDP ratio is not going up like people thought. The U.S. is doing some good things despite the concerns in the near term, which I'm not going to minimize.
Mm-hmm. I wouldn't disagree that those things are going on. I think that the conviction about them doesn't arrive by invitation. So in other words, these rotations happen, but they can be messy. And I feel like one of the reasons that we reacted so strongly to Bernanke is if he's sort of signaling we've done all we can do, or we might by mid next year, then, and we still have an economy that's not performing the way we feel like it should be, and we still don't see the reacceleration in the second half, we don't have another story to let.
Agreed.
Here's the thing.
I think there's something bigger going on as well. Bernanke also talked about upgrading the U.S. economic assessment. The downside risks had been reduced. For example, 1.7